Hello to all traders and welcome back to another market review brought to you by Orbex. So where do we begin as we kick off the trading week, especially with progressive NFP numbers on Friday? We've seen gold take another step further for another record high after 7 bullish candlesticks on the daily chart. Quite phenomenal reading for the yellow metal, and obviously the focus now is on the Fed. Are they going to start easing sooner rather than later? That is the consensus at the moment. They did say in the first half of this year they won't even start cutting rates, but after really progressive data coming out of America for the last few months, we might see that being brought forward, and this is why gold has been starting to jump so dramatically, and the dollar is actually on the back foot now for the first time in a few months. So get straight onto the charts. On the daily chart, sorry. As I said, 7 bullish candlesticks, and even today we see a slight bullish candlestick on the daily chart. As you can see, we've broken resistance after resistance on gold. So how much further can it go? Well, obviously analysts are looking at the next psychological level, which is $2,200. That's not really far away, only another $20 shift to the upside. So that's looking likely. We might see that possibly by the end of this month, not even by the end of this week. This could happen. You know, it's only $20. It's very, very likely. So if we just look on the 4-hour chart, we just wanted to see if there's any sign of a correction, a slowdown on price action. As you can see here, it's not looking likely at the moment. We're having slight consolidation, you could say, intraday, but as you can see here, wave after wave, upwards, not even really any signs of a slowdown at the moment. So if we keep in this bullish rhetoric, this bullish channel, we could see another move to the upside. As you can see here, RSI is hitting top after top, not really slowing down neither. Usually we're getting some moves into the territory of being oversold or going into neutral territory at least, but that hasn't happened at all. So we're most likely looking that gold could have another leg higher, but obviously look for corrections, because every time there is quite a bullish rally, there is a pullback of some sort. So this could happen, but at the moment it's not looking like slowing down at the moment. But as I said, just look out for those corrections if you are trading gold. On the other side of that dollar index, we're just seeing that the dollar hasn't collapsed as much as what a lot of people thought. A lot of economists that I've been speaking to, a lot of traders, they did think that the $100 mark would be breached sooner rather than later, but it is holding its own at the moment. We are seeing now that price action has fallen quite dramatically, but only by a couple of dollars. They're going from the high 104 to the high 102 at the moment. So only a couple of dollar move. If you think that not so long ago in December, we were actually trading at that level at least. So that's something you could say the dollar has been clinging on to. On the 4-hour chart, as you can see here, very, very bearish channel for most of the last week or so. And we're just looking likely now if we're going to see a kind of step up, if that's going to have a bit of a symmetrical triangle pattern and a possible breakout as well. So just keep an eye out for gold. If we're going to have a correction, it could happen if the bull run does get exhausted, and obviously with the dollar that could bounce back depending on the data coming out of the fundamentals this week as well. And don't forget the Fed interest rate decision is only a couple of weeks away now, so that is going to be a key driver for gold and the dollar. So let's see what happens, and join me tomorrow for the next update, and we'll keep you posted on our Telegram and YouTube channels. So have a great trading day ahead, and bye for now.